Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Monday morning. We're taking a look at the indices as we kick off our Charts and Coffee. Snoopy, love this mug. Charts and Coffee show. All right, so hope everyone had a good weekend. Did something fun, maybe a good movie or book. I actually got it. I did get a new book. Where is it? Ugh, I didn't bring it with me. But yeah, I did pick up a new book this weekend. Not a trading book. I rarely pick up those. Where did I? Oh, here it is. Here it is. It's not a trading book per se, but oops. It is kind of cool. It's actually a really fun read. You can just read a page of it every morning. I just kind of randomly will open up to something. Today, there you go. That was today's, can y'all see that? Know-it-alls. Today's page was know-it-alls. So this is Charlie Munger's quote on know-it-alls. I try to get rid of people who always confidently answer questions about which they don't have any real knowledge. And then we go to social media, right? All right, so let's get to it. Have I canceled a weekend show? Grace, no, I mentioned, I think, I can't remember when I mentioned. I'm just taking a hiatus until next year. We're going to reboot that Sunday show, Top Tier Outlook. And I'm just kind of figuring out what the format will be. But yes, it will be back. It will be back. All right. But Charts and Coffee is going nowhere. So we will definitely be here. All right. We're getting a big old gap up this morning. Brand new highs, gang. Stick with the long side. It works. We're kicking off to this second half of the I'm going to open up the recaps to show you. There we go. Okay. Yep. There we go. We're kicking off the second half of this month with a number of open swings. We've been pretty much averaging about 6 to 8 open swings for the last, I'd say, 2 months. Now, again, remember, swing trading is not an active style. It's not we're getting into something every day and closing it out. That's day trading. Even if you're doing that on a 4-hour chart, that's still day trading. Ultimately, what we want to remember is, depending on the time frame, right? Obviously, the longer that it is, I shouldn't say obviously, maybe it's not obvious. The longer that the time frame is, the less actively there will be setups, because unlike a 5-minute chart, for example, where there's a candle every 5 minutes, or an hourly chart where there's a candle every hour, start moving out to a daily. I've just got this candle to work with today. Now, inside that one candle, inside this big gap up candle, I mean, who the heck is bearish right now? I mean, seriously, I almost, but not quite, feel bad for bearish folks out there. Why be bearish in an uptrend in a seasonally bullish time as we get this window dressing or performance chase, whatever you want to call it? And when we look at this candle, inside that are all those 5-minute candles. Inside that are all those 1-hour candles, and the frequency of the candle is going to give us the patterns of support, the resistance, whatever it is that we're looking for our trades. So stick to the long side. If you watched the video, free videos, both of them from last week, you know that I have been really emphasizing a do not watch list. In other words, what are those symbols that we don't want to focus on that are going to distract us, both in intention and capital, to trade them because of the hopium, as it's said, of a move versus things that are moving. And there's a few things that in November were great. Financials were one of them. And they're not as great in December. There are some things that have started to move, like technology and communications continue, consumer discretionary. If you've been watching Charts and Coffee, if you've been catching the recaps, if you've been seeing the videos that I've been sharing on YouTube, these are very old narratives. It's all of a sudden it seems that folks are catching on that consumer discretionary, communications, have been moving higher, but this is probably about a 2-month-old trend. So think about how many opportunities have been in this overall movement higher since beginning of November. So you can see we've got technology opened up as of Friday. I still have a small position in Citi. So even though I'm actually putting financials generally on a do not trade list. However, Wells was a position that we built before the election, and we're going to have to close it out this week. It's been an unbelievable trade. It's been a fantastic trade, something that we bought for $3. And those 62 and a halves are trading, and they're obviously very deep in the money at this point. Those 62 and a halves are trading at, I guess they closed last week at about $8, but we've already scaled out twice. So now I'm just playing it into the time eventuality of closing it. But then you'll notice this is consumer discretionary. We're straight up playing communications. This position of Walmart's a quirky one because staples are not necessarily a really strong corner of the broader averages. And yet Walmart and Costco have been very strong stocks in that group. And the same can be said for the open position that I have in Citi. I don't love XLF. I don't love XLP, financials and consumer staples, but we do really like the strength of those individual stocks in those sectors. I'm not going to do any more trades like that for the remainder of this year. In other words, even if it is a strong stock, unless it's part of a strong index, strong sector alignment, I'm not going to, grab a one-off. Now, notice we're not trading anything that's in a downtrending sector. We're not trading anything that's in a downtrend. We're still focusing on the uptrends. And by the way, this time of year, I'll get some emails of folks saying, hey, Rag, I'm watching your videos. I can see what you're doing. Obviously there's some good trades to be had out there, but I'm just not catching them. And pretty much the same thing I'll tell you that I told them. Make the priority. I don't know how many of you read the book, The One Thing. That's a great book to read at the end of the year. The One Thing. And if I were to say, if there's a one thing for your trading life, and you can have a one thing for every part of your life, right? But if there's a one thing for your trading life, at least for a month, if not a quarter, if you can dedicate this whole year, find the uptrends and prioritize those, period. And I think you're going to find that your trading improves by virtue of nothing more than you're just fishing in a better part of the ocean. You're just finding where the probability of catching fish are, right? Okay. So let's get into some of our questions. And again, if you're looking at little tactics, it's little things, gang. Once you learn the basics of trading, candlesticks, trends, how to use whatever indicators, after that, it's a lot of little nuances and a ton of discipline. Are there things that people talk about? Yes. Am I in them? Usually not. Right? I'm not going to chase the attention. I'm going to follow the trends. Two very different things. And losing traders and frankly, losing investors chase the attention. They're not necessarily following the trend. So, those are things that if you can just make that small adjustment, trading life gets a whole lot easier. All right. Next up, PK asks, when do the big funds finish tax loss harvesting? They have to do it by the end of the year. Yeah, tax loss harvesting is they have to be realized losses for 2024. Yeah, could they go to the end of the month? They could. We're never going to know, right? there's no email they're going to send the planet letting us know they're done. Oh, by the way, we're done. However, common sense tells us that it has to be the end of 2024. So the last trading day of the year would be the last opportunity. And that would be, Tuesday, the 31st? I think the 31st is a Tuesday this year. Okay. All right. Let's move on over to what has been a very strong sector, and that is the NASDAQ. And a couple things to keep in mind in terms of what's going on with tech. S&P is moving higher. And it's really coattailing tech in a lot of ways. The best of tech continues to be communications and consumer discretionary. So if we take a look, for example, here we go. Here's consumer discretionary. Consumer discretionary is a quirky sector, but it is most influenced by the NASDAQ. It's most heavily weighted in that group. And you'll see here, what's in an uptrend here? Now, I don't know anyone who trades Booking, but Amazon, Tesla, TJ Maxx, Chipotle, O'Reilly. You got your hotels down here. There are some uptrends here. If you want to focus on the ones that are most tethered to the NAS, obviously that's Amazon and Tesla, right? So that's what you've got in consumer discretionary. If you take a look at what's going on with XLC, you're looking at XLC. Notice it's not been as strong. It's still really very much in an uptrend. So I've been trading XLC, the ETF, not necessarily the individual stocks. I mean, the breakout in Google, that was a big part of XLC's movement with the Willow announcement. Meta's been at least getting out of its own way. Netflix has been a monster, just an absolute beast of a trend. Take-Two is continuing to move higher. And it looks like pieces of the telecommunications, which overlaps with communications, has gotten back on track. It looks like we're seeing a little bit more movement consistently in things like T. And I can't say Charter's really helping. T-Mobile's not really helping, right? There's been some weakness there, but Verizon's holding. I'd say T is about as good as it looks. And even things that are a little flat, but not weak, things like Disney, that's the difference between something that looks strong and something that is actually strong. So Disney would be a no, T would be a yes. The XLC and Netflix would be a yes. TMUS would be a no. So in terms of separating or prioritizing even better the list, make sure the very top of the list of your weekly watch list, daily watch list are trends. And that even applies to intraday trading. If I take a look right now at NASDAQ on the 5-minute time frame, which is my intraday day trading time frame, if I take a look at the NASDAQ on the 5-minute, take a look. I've got a trend. We're trading above the previous session close. You take a look at the S&P. I've got a trend, right? Now, there's something else we got to discuss in terms of this move higher, right? Which is the obvious thing that many of you are asking. Hey, Rog, isn't this the last triple witching of the year? Aren't we going from the previous contract, which was the September? Let me show you here. Aren't we moving out of December into March? Aren't we rolling from one contract to the next? Yes. But keep this in mind, gang. Don't dismiss the move higher as simply, it's a gap. Think about it in another way. And I have a lot of folks say, but yeah, Rog, isn't it just a gap? But think about what it's really telling you. I mean, really, to think about that for a moment. If I take a look at the ES contract for December, it's at 60,072, right? So this is thinking about where the end of the contract, which is this Friday, where this contract is, what it's telling us about sentiment. Well, the next contract out is March of 2025. Once again, I'm looking at the S&P, but now with an eye towards the end of Q1. Well, if we were pessimistic about Q1, if we were scared about what's coming, if we were concerned about whether or not the Federal Reserve could cut in January or March, whatever those things are, whether that be a new administration, whether that, oh my gosh, I saw another recession headline. Financial writers, I'm not talking to anybody in this room, but if there's a financial writer in this room, for crying out loud, quit writing about recessions. Y'all have been wrong for 3 years. Yeah, I mean, there's just so much garbage written out there about equity markets. It's mind-boggling. I guess they have to write something, and preferably if it's something scary, then I guess they figure they'll get clicks. But think about what the difference between the contracts are. Roll does, in many ways, tell you a lot about where expectations are going forward. Futures are very blatantly so, a forward-looking machine, right? So those of you that have never thought about the month, okay, so here is the month of December. The first 2 to 3 trading days of the month have been very difficult in December. In fact, the first week or two was choppy and even a little bit bearish. But what happened? Everyone said, oh, that's the end. And of course, all those recession headlines started coming about. All right, so here we are on the 16th. Now, The first week oftentimes can be kind of bullish. So you see redemptions at the end of the previous month and you see buying at the beginning of the next. So the second week, the tendency is, the way I look at what's known as the pit bull low, and yeah, there's a question Dave has on the pit bull low. For those of you that are not familiar with it, this is named after a guy named Marty Schwartz, he's probably one of my favorite interviews in Market Wizards, and he's got a book called Pit Bull. The reason it's called the pit bull low is that's his nickname, and he started talking about the low that tends to establish itself the week before options expiration. And there's a very defined version of it. But what I've found, my observation of it is sometime between the Wednesday to Friday, a week before expiration. So if the expiration is the 20th, I'm looking for that pit bull low between the 11th and 13th. Right? That's the way it would be this month. The third Friday of the month is always OpX, and when it's the end of the quarter, it's the triple witching. There's no such thing as quad. There's even though it's oftentimes called that fourth market really doesn't exist anymore, stock futures. So there's that triple witching. Lots of things are expiring. But on the 13th, I called it the pit date. It's also known as the roll date. And that is when the pit traded, right, contract of the S&P, the folks that trade it will stop trading the December contract and they'll move on over or roll to March. So what you'll find now is the open interest for the futures contract has gravitated and has been for the better part of a couple of days. It's gravitating over to March. The volume will start moving over and has moved over to March. So it's the front month. It's the one that has the attention. It's the one that we're using to gauge, in this case, what the S&P is doing. So the week before expiration, which is the 20th for this month, the week before you have your roll date or your pit date. And so now what you're seeing on the chart, because the platforms, Thinkorswim, Tasty, TradingView, TradeStation, whomever, the platforms have acknowledged and typically do acknowledge the roll date, the pit date. So that next trading day, which in this case is Monday, this was reflecting the Z contract, right, on the 13th. Now we're reflecting the H contract. So we moved from December, which was traded on Friday, to now March, which is traded today on Monday. That's it. That's it. And you're going to see that, especially with the indices. Now, the bonds roll differently. The bonds have a different roll date. They've already rolled. But you'll see NASDAQ, S&P, Dow, Russell, this roll is going to occur. But again, do not just say it's a gap, gang, because remember, what this is where December was and where March is, right? There's optimism moving forward. The S&P is expected to be more valuable in March, like as we go into March, that contract and that expiration, than it was in December. Now, here's another thing that happens. Everyone's going to lots of people are going to start to think the gap must be closed. It doesn't have to be closed today. It doesn't have to be closed tomorrow. It could be closed anytime between now and the end of the March contract, if frankly at all in this upcoming quarter. So please don't think that gap up needs to sell off 100 points to close the gap. It doesn't have to. It does not have to. So this idea that gaps have to close, I don't disagree with. I don't think anyone here disagrees with it. But when they close is a completely different conversation. So that's where we are. That's where we are right now. Okay. All right, gang. And just like that. So hopefully that makes sense as far as what's happening on the broader averages. I'll have a free video out tomorrow at the Simpler Trading YouTube channel. It's on Tuesday. And I'll have another one on Friday. You can check out Friday's video if you'd like to get a little bit more expanded a conversation about what it is I'll be looking at this week. All right, gang. Be good to each other. I'll talk with you soon.